The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks, and I'm going to start the show today with the New York Stock Exchange Index chart because today's low, if it holds, is very, very significant. We made an exact 61% retracement, as you can see from the low we made back in April. And I think it's a very important spot that we have to really focus on. It went to the exact tick. I mean, this index trades at 10,270 something, and it went within 1 point, 2,275, and the low was 2,274. So if that holds, this is going to be a really important cycle point from my point of view. Now, cycles are very difficult to define sometimes because they're either expanding and contracting, but one way to do it is that if you look at the relationships of the lows of the Fibonacci sequence, in other words, the low we had back in April and the low that we're having now, if that comes in at a perfect 61% retracement, that tells you that that's an important cycle low. We saw this phenomenon back in 2007 on August the 15th when we made a very significant low on that date, then went up and made new highs into October, and then the market came totally unglued. What's so important about this one is the fact that we made the reactive high here in both the Dow Jones and New York Stock Exchange Index on the day last Thursday when we were up 300 points, and of course, actually up 330 points, and the next day we were down 400 points, and it took that low out. So that tells us that we could be going down from October the 6th into the solar eclipse that we're going to have on October the 23rd. Now that's what happened, in 1987. If that's going to occur that way, we don't know if that's going to be it or not. But if the low holds today and we start to get a rally, this tells us that we're most probably moving up into the solar eclipse, and that would be what we call the last chance to get on board for the move down, if in fact that unfolds the way we would like for it to do. Now, we just don't look at the New York Stock Exchange Index because that's only one index. It happens to be the very best index because it's the best indicator of the broad stock market that there is, certainly better than the Dow Jones, the NASDAQ, or the S&P. But if we go to and look at the next one, which will be the Dow Jones, which will also have the Bradley stock market model hooked onto it, you'll notice that the low today, and I did this chart Saturday morning, we were looking for a low to come in around 16,490, and that happens to be a 1.27 of the swings that we had last week from low to high and expansion down to 1.27. It's also an exact 61% retracement of the April low, and it's also exactly 786 retracement of the April low. So we have three major ratios coming in here on the Dow at 16,450. So as long as we can stay above 16,450 today, we've got a chance for the market to have a pretty good rally here for the next few weeks. Remember now, we've been down 3 weeks in the Dow. We've been down 5 weeks or more in the broad market because we started down September 3rd and we made the lower low today, so that takes us down 5 weeks. Usually after a 5-week correction like this, you turn around and you get a 2 to 3 week reaction to the upside. We'll have to wait and see if this is going to really happen or not, but we'll just have to wait and see. That's all we can do. But the lows today and all of these indices that we watch were flat out spot on to what we were looking at, to actually see. We had the same thing occur with the NASDAQ. Only the NASDAQ was even more bullish because it was only making a 382 retracement of the low that we made back in April. So that's still held up, relatively well. So the market is basically very oversold, and we are coming into a period where this could actually hold. The reason why I'm saying that is that on Saturday, we had a Venus opposition Uranus. That's basically the Fibonacci cycle of Uranus, which is 226 days versus the number of days in the calendar, 365. That comes out to 0.618 of the year, Venus going around Uranus, and that's why when you plot these and go back and historically look at them, that these cycle points occur on Venus-Uranus aspects. They are very accurate, and they're usually off, at the very most, they're off by 2 days. So this is the zone where we should be bouncing, from if it's going to work. However, if we go below 25,400 in the Dow, you don't have to worry about any cycle lows for a while, because they won't come in, I don't believe, until October the 23rd, which was what happened during 1987. The lunar eclipse happened on October the 8th, and the bottom of the market was on October the 20th, and the solar eclipse came in on October the 23rd of that year. So that cycle could still be in play, but in order for it to really melt down, the Dow has to get, in my opinion, below 25,400, and then that would that's 100 points from where we're trading right now. So that's what I would be watching to see if that is going to, to be the case. We won't know that until we see it. I wanted to put that chart of the 1987 market in here one more time so you folks can take a look at it. And it shows that lunar eclipse, and then we went down into the solar eclipse on October the 23rd. Actually, the market bottomed on the 20th, but didn't really go anywhere for several months till it, everybody was so shell-shocked that no one's afraid to put an order in. So it was really a, pretty wild time. We had one other market that deserves our attention overnight. We had a giant ABCD pattern form in the NASDAQ, and it completed almost perfectly within 30 DAX points. We went down and made the bottom around 86.90, and it was pretty much spot on, and we've rallied 200 DAX points already today. So that tells us that this ABCD pattern is most probably in effect, and that could also be cycle related and giving us a bounce in some of the indices that we're having. But folks, make no mistake about it, folks, the bear family has arrived. Mama bear, Papa bear, baby bear, and they're here to stay. You'll start to see it once we go below 16,500 or 16,400 in the Dow, and below 1880 in the S&P index, and then I think you're going to start to see an acceleration to the downside. We haven't had any really bad days yet. 400 points is not a bad day. We already said here many times that we're going to do at least 1.618 of the worst day we've had, and so if you multiply 400 times 1.618, you're going to come out to at least 700 points, and that's going to be very, very close to the all-time record, because during the time when we had the TARP and the Lehman Brothers and Bear Stearns and all that stuff, we were down 777 one day, and then 3 days later when they passed the TARP thing, it went up 888, and then from there it dropped another 2,000 points in the Dow till we finally made our bottom on March the 9th. So I believe that we've started a secular bear market here that is going to take us down a great deal, and we'll try to follow it step by step, but I believe that step one is pretty close to where we are right now, and we should be holding that level and today, and if we can, we might get a rally into that solar eclipse on the 23rd is what my assumption is, looking at the market the way we are. It's just really amazing that we hit every single one of these numbers just absolutely spot on. It was just really amazing. We'll take a look here now at the, this was done Saturday. Remember now, I haven't updated it yet. I will during the break, but you'll see that the S&P we were looking for the number to come in at around 189.28, and the low today so far has been 189.19 in the S&P. That was a 61% retracement off of the April low. So that tells us that we're pretty close, to a very significant cycle low. We took out the August lows, which basically tells us we're in a downtrend. Now what we want to see is a 3 to 5 day rally, maybe even 8 days, taking us out into the 22nd or 23rd of October, and that's where you'd want to be looking, to potentially get ready to go short again. But if we go below these lows that we made today, this is a very, very ominous situation, and that's going to take us down much harder and much faster than most people will want to, will want to realize. So that's the key thing to look at here from a technical and a cycle standpoint. That's basically what I'm looking at here. Now, what I'd like to do is to spend a second here to look at one of our favorite indicators, which Basil Chapman has to be the master of it. I'm almost afraid to bring this up because he is so good at it, and I just wanted to show you that we've been here many times before here in this VIX index, and over the past 18 months, we've been up here about 5 times at this level of around 22. We've taken out the highs that we made since last June, which also is indicating that the market is beginning to, waver quite a bit. And believe me, I believe you're going to see a VIX reading of above 50 sometime before Christmas, and it might come sooner than that, but that would be my guess. This market long-term is still very, very it's oversold still, even though we've doubled in price. It's still very, very oversold. So this is what I'm seeing. I don't know if I'm going to be right or not, but it certainly looks like the lows today are very, very important, and they should be able to tell us that we should be ready to rally here, and if we are, it'll give us a chance to be a seller here. Hopefully it's between 5 and 8 trading days from where we are now. All I do is try to look at the relationships of where we were during particular time frames, and when the patterns and the cycles that we look at match up, that gives me the probabilities that I'm seeing that will tell us that, yes, this is what we should be looking at. And if they start to fulfill like they have been over this past cycle, we have a pretty good roadmap of where we think we're going. We never know for sure, because it's always a, by guess and by God, and God always has the final word because she's never wrong. So we have to watch it very, very closely, and that's why we use, some stop protection to keep us from, getting banged around when the market, moves counter to what our predictions, have to be. But so far, things have set up okay for today. There was not a crash, which I was certainly relieved to see that. I was a little afraid Sunday night when the market opened down 12 to 13 in the S&P. We're down 80 in the Dow. But they held up overnight, and the DAX, I think, brought everything back. So I'm going to take a little break here. The Dow is still down, but it's coming back a little bit. Gold is still up on the day, but not by much. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. And I wanted to mention that we did get an email from our good friend Charlie in Atlanta, who's been on the price line short side for quite some time, looking for a price objective of 1030. And it hit 1,030 today. Actually, the low was 1,015, and that was the price objective. Was looking at 1,030 on the stock. He's made so much money that he's going to invite everybody listening, including all of our TFNN folks that are in the Tiger Den and everybody within listening range. We're going to have a big party in Atlanta on Charlie. And as soon as he sends me his information on where it's going to be and how everybody's going to get there, I'll forward it on to you. But I would mention that I would not hold my breath for a very long time. Anyway, we want to congratulate him on this because he's been one of our frequent callers. He's been spot on with this, and it went down to the level that he was looking for. And I don't know whether he got out or not. I really don't. I didn't get an email from him, but I certainly had him on my mind today when I saw the limit minder go off. And it went through 1,030, and it dropped very quickly, and then immediately went right back above 1,030. So it's always interesting to see, something like this happening. I want to get back to the overall, where we are with the stock market. We covered the New York Stock Exchange Index. The fact that we hit the key number there, we hit the key number in the Dow Jones, we hit the key number in the NASDAQ, We also hit it in the S&P 500. We also went right up to that level in the VIX index, that we look at, all the time. The other one that is very, very interesting is we looked at that pattern called the jaws of death with the Dow Jones transportation, and I think it's necessary that we take a quick look at that just to realize that we did make the price objective on that, and we should be completing that jaws of death pattern that we had in this, and I'll get this into the Tiger TV. And that happened to also, another reason why it's so important is that number also happened to be spot on as a 61% retracement of the low from April 14th also. So the cycle from April 14th is reappearing today in all of these markets if it can hold the lows. That's the bottom line of what we're watching here. It's got a real chance to do it. Whether it's going to do it or not, we'll have to wait and see. But all of the objectives have been met. So the question is whether we're going to get a bounce from that. I know you folks listening will probably have a hard time recognizing that this is Larry Pesavento speaking, that there might be a rally coming, because I know you don't believe that I believe in rallies, but if we're going to have one, this is going to be it. So just take a quick look at these charts, because as long as we hold today's lows, we've got a very good chance of a substantial rally coming in here. And, this market has been very bullish for a long time, and it's very oversold right now. So we could easily get, a pretty good bounce from the things that we just talked about. I mean, there's a lot of numbers hitting there, and they're all hitting at the same time. I mean, they're not, not varying. They went right to the exact numbers. You have to respect these because, these are the numbers of sacred science, of which the Fibonacci numbers, are part of that. So we have to really pay attention to where we are today on October, the 13th, because this is going to be a really critical day. The number to watch, folks, is 16,400 in the Dow and 1,880 in the S&P 500. That would be the ones that I would be, really focusing on very, very closely. Now, we're continuing to see, weakness across the commodity board, and I believe the next market that is getting ready to take a Florida vacation is going to be crude oil. We're very close to, the market just, giving up the ghost here in crude oil, but it's going to take a little bit of time before that happens. But if we can get crude oil below, $84 a barrel, we're trading at 85 right now. We've got a chance for crude oil to, be a really, really quick bear market down to possibly the 75 level without too much trouble. So we'll see what we have. We've got a caller from Florida. David, are you there?
Yes, I am. Larry, how are you doing today?
I'm good, David. Tell you what, we'll start talking here, then we have to pay some bills for our Chairman O'Brien, and then we'll keep you after the break, okay?
Okay. Thank you so much for taking my call.
It's my pleasure. What can I do for you?
Got a question. Generally speaking, have you ever done any homework as to what tends to hold more, like a completion of an ABCD pattern down versus retracements hitting the fib numbers like what we're seeing in the SPY today with the S&P? It's hitting the 618 retracement, but still has a little ways to go to finish out the sequence.
Yeah. David, I'll cover this right after the break, but I've done a great deal of work with that along with Bryce Gilmore. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex NADEX in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. NADEX is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with our friend David from Florida. David, are you still with us?
Yes, sir. How you doing today, Larry?
I'm good, thank you. Your question was, which is more important, the pattern or the ratios? Is that correct?
Yes, sir. And specifically, I mean, in general, yes, but we're seeing that in the SPY today. You were commenting on earlier in your show that we were seeing the 618 from, I believe, April's move up, and then depending on, you know, and a lot of times for confirmations, like I'll look intraday and complete the Fibonacci's ABCDs down and do it intraday.
Absolutely,
and apply it to it. You know what I mean?
Yes.
So kind of cut to the chase, it hasn't completed the D point from the move down, you know, at the beginning and when the S&P was at, 2014 and change.
That's correct.
But it didn't, it's hitting the 618, so I was looking at it and I was saying to myself, what's more important, the 618 or the, or the ABCD complete, because I'm thinking like you're thinking that, we've been down significantly where it's time for probably a decent tradable bounce before the next leg down, and, just thinking what your thoughts were on that.
Well, I believe that it is the ratios that are more important. I spent a great deal of time learning this through my good buddy Bryce Gilmore out of Australia. You know, he wrote several books on the geometry of the markets, and he was a firm believer in, you know, the sacred numbers, you know, the numbers of sacred science, which are the numbers 1, 2, 3, 4, and 5. The square roots and those and their reciprocals. Well, that gives you, you know, 15 different alternatives. But if you take the Fibonacci summation sequence of 618, 786, and use those numbers, you know, as contracting numbers, and 127 and 1618 as expanding numbers, those are the really key things to look at. And I watched this, you know, very, very a lot. In fact, why I spent so much time this weekend was looking at the 5 major indices, because they were all coming to a major Fibonacci level. The NASDAQ at the 382, the NYSE at the 786, the Dow at the 61% retracement, and around after about an hour and 15 minutes of trading, my beepers were going off like crazy, but they only went off for about 2 or 3 minutes, and then they stopped. And that means that all those numbers were hit, and the market just turned around and started up. That's what gives me the confidence, you know, to believe it's the number itself, the ratio, and not so much the pattern.
Okay, fair enough.
You know, that's the way I look at it. The Bryce was very adamant about this. I can think more than 1 or 2 times where he would say this market will not go above X price, and it did not go above X price. I mean, he really believed, you know, that strongly in those numbers, and, you know, I see it a lot, especially on a day like today. But part of it, David, was I was looking at this astrological aspect of, you know, the Venus opposition Uranus, because that's 180 degrees, which, you know, is opposition. The conjunction is at 0 degrees, and these are really powerful. The market has better than 80% chance of a major high or low on those days, and since it came in Saturday, we have a little, you know, follow over Sunday and Monday, and that's it. So that should be it if it's correct.
Fair enough, fair enough. Do you have time to take a look at gold?
Oh, sure, absolutely. I'm watching gold very, very closely. In fact, I'm watching silver, you know, at the same time, because we're having that same problem again where, you know, gold went up and made a higher high than the previous several days, and silver could not even get above, you know, the 786. So my assumption is that we're going to pull back once more in gold, probably down to the 1200 level, and then I'd be willing to take a look at it. But on the upside, we could easily make 1245 to 1250, you know, without any trouble at all, because it is starting to turn the corner. We've tested the 1180 area again, which was, you know, that's the 3rd time we've been down there. In fact, yes, I believe I have that. Just give me 1 second here, and I'll show you the importance of this number, because it is literally spot on as far as 3 drives to a bottom type thing. You'll notice that when I put it in here, this goes over a period of a year and a half, and you'll notice that we've had 3 higher bottoms in gold. The first one came in at 1183, the next one came in at 1185, and the last one came in at 1182. That's within $1 of each other. My God, well, you know, you can't get any closer than that.
Absolutely.
Yeah, and so, you know, right now we did get up to 1237 last night, which is our best rally, you know, since middle of July, and it's done it very quickly. So I'd be looking to buy on a pullback. The question is, you know, why silver can't get out of its way. But silver is a little quirky because, you know, it's 1/6 the volatility of the gold. And so it doesn't take very much for that market to move. So if someone comes in to cover a position and there's nothing there, you know, silver can run $1 an ounce, you know, without even taking a breath.
Easily. My expectation is that the dollar is going to take a breather and continue its retracement down from its near parabolic run, which I think is going to help gold. There's some other reasons that I think are going to help gold that I won't go into because it's just the amount of time it would take, and people think I'm nuts anyways. But I'm convinced that the days of fiat currency are coming to an end. That fortune much longer. It's going to be
one other thing, David, I wanted to mention to you. I posted a chart of silver into the room, and you asked a question, which was more important, the ratios or the pattern? And you'll notice that the low that we made last week in silver was an exact 1.618 expansion of the low from December to the high in February. That came into within 2 cents of the exact low in the silver market. That was the ratio of 1.618. However, if you looked at the ABCD, it extended, way past where it was supposed to go. So you have to look at the ratios first, in my opinion. That's been my experience. Whether that's right or not, I don't know, but that's just been my experience.
Well, I haven't been trading nearly as long as you have. Fractionally, Larry, I don't know if you remember or not, but I took a trading class from you as I have from Tom.
Long time. I remember, David. I sure do.
And, you know what I'm saying? It's a fraction, my friend, of the multiple years you've been doing it. But It's been what I've noticed, put it to you this way, what I've noticed in the 4 years or so that I've been doing the pattern trading is that the retracement numbers seem to hold more regularly. I mean, it's a game of probabilities. But it seems to hold up more than the completion of the pattern. I've noticed that personally for myself, and I was going on that, and I was thinking about that earlier today on your show. I was listening to your show, and you had mentioned about the 618. I was like, hey, maybe it's a good time to call Larry and get his input on it. But one more quick comment, and then I will hang up. And thank you so much for taking my call, Larry. I appreciate it.
It's a play. I enjoy talking to the folks that call in. That's great. I wish more people did.
And I think, if you don't mind, one last one. Pull up the dollar index on the the Forex screen for the dollar index. If you don't mind, put it on like a 2-hour.
I don't have that up right now. I'm on a different computer than I'm usually on, so I don't have that capability right now, but I know the numbers. So if you tell me what you're looking for, I know that 87 level in that dollar index is, it's like a concrete tombstone in my opinion, but whether that's going to be it or not, I don't know.
It is, Larry. It absolutely is. I don't know if I would use the word concrete doom, man, but it sure is. The thing is, if you look at it, if when you get a chance, you got your other computer screen going, put it on like a 2-hour chart. What you're going to see is a real nice ABCD down off the high at 86.76. Comes down to 84.93. Does a counter trend bounce up to close to the, not exactly at, but close enough to say a 618 retracement. And then we're seeing a move down at 50%. And when you see, if you look at the bar, that's the overnight bar in the 9 p.m. Time frame from last night, Sunday at 9 o'clock. You see this wide-ranging bar, and then you're seeing it go sideways. And as it goes sideways, if you take it one step further and you put it on a 10-minute, you're seeing lower highs. It's forming a bearish triangle. And my expectation is as follows. One, the dollar's going to break down. Gold's going to go topside. When gold goes topside, it's going to pull silver with it topside. And I think my expectation is that for the near future, let's say over the next several weeks to coming months, that gold has made a bottom, and on the next retracement, I'm long gold now, but on the next retracement, I plan to add to it significantly, and I think that's going to be the play moving forward here for the foreseeable future.
Well, I agree with all of that. We're very old in these metals as we are in the grains and stuff, but the metals specifically have such beautiful numbers that they made last week, and then they've had the rally which we needed. I'm just a little concerned that silver has not been able to pop up, but like we mentioned, it is a lot smaller market than the gold market. The gold market is much easier to trade, than the silver market without any trouble at all. So that's the real beauty of what we're looking at here.
Well, thank you so much. Hey, Larry, one last parting comment here. If you're looking at the SPY, to put it back on the daily chart, it's making a real nice doji right off the 618. Yeah. And I think we may have a nice little, I don't know if I call it a dead cat bounce or what you would call it, but a pretty nice little counter rally there that, that's tradable, can bounce up and set up the next leg down, man. We're starting to get some movement, Larry. It's good, man. Good. We need some volatility.
The one thing we are getting, David, is we're getting good volatility. And that's the thing that pattern recognition swing traders really love, is because these numbers really shine once you have the volatile markets of up and down. I don't know if you know this or not, but last Thursday in the Dow, we had the equivalent in the first 3 hours of trading, we had the equivalent of a 350-point swing in the Dow between up and down. I mean, that was really really exciting, and it was just to watch it hit the numbers, because I believe in them so strongly, is really amazing. The only problem that I have is, and I've never figured this out, is to know whether it's going to hit 618 or 786. I don't know that. No one else does either. But sometimes it'll hit 618 and stop like a rocket and turn like a rocket, and other times it goes falling very fast down to the 786, and then that's where it turns. So it can be an enigma, but at least I'm able to handle it by, trying to, use a little bit wider stop when it's crazy. But boy, we've had volatility that is just absolutely superb.
Well, if you knew where it was going to hit the 618 or the 786, Larry, then you wouldn't be rolling in Tucson. You could buy one of those buildings in Hong Kong that we have a
place.
You can broadcast out of the penthouse tower of the Hong Kong building because you own it.
No. I'm not that type of person. We have a really, really cute little small place there that's just perfect for two people. And I like my place here in Tucson, so I've done all that stuff, and I'm pretty comfortable with it. What I really enjoy doing is getting up and trading. I mean, that's unfortunately it's what I love to do, and I've already mastered golf. I'm a 2 handicap in golf, so what am I going to do? My handicap is 2. It's driving and putting.
Yeah. Well,
listen, David, thank you for calling in, my friend.
Thanks,
I certainly appreciate it. Okay, folks. Well, we're getting a little bit of rally here. We got the S&P got up to challenge the highs of the day so far. Haven't quite taken it out yet, but we've had really good swings. We've dropped, came down 20 points and up 20 points in the S&P, and that's the kind of action that you like to see if there's a potential bottom forming here, because it scares the longs, it scares the shorts, and then it finally decides which way to go. But we need to close above 1920 in the S&P futures to really get it moving up towards the next level that we would be looking at if the market is bottoming today. And it's still early. We're only halfway through the day, and as you know, if we can go down 20 and up 20, we can easily go down 20 again. So it's still early. You don't really know. But the numbers that we hit this morning on every index that I look at was spot on to a perfect Fibonacci retracement, every single one. And that means something to me. That is a very, very important cycle point, to really keep an eye on. Someone's asked me the question about Apple. The fact that Apple is held up, during the correction, it didn't back off at all. It's still trading near its all-time high. That's a very positive thing. But remember, all of these stocks have their own cycles. I mean, not all stocks top at once. And if you remember, when Apple topped at 703, the rest of the broad market continued to go higher before, Apple lost half its value. So you don't really know. But it has been very, very strong in lieu of a very weak market. And, that's it. I have one other question that someone has just asked me, and that is this a potential for a major bottom in the stock market? And my answer to that is yes, it is. And the reason why I say that is because every single index that I follow, with the exception of the Russell small cap didn't quite do it. It went a little bit below the number I was looking at. But the Dow Jones, the S&P, the New York Stock Exchange Index, what was the other one? The transportation, all of them stopped exactly where they were supposed to stop, as did pretty much did the VIX index. So all of that is telling us we've got a potential for doing this, but we need to close above 1920 in the S&P 500 futures. That would be a big help, or a close above 16,700 in the Dow Jones, and we'll take a look at it. One other question that someone's brought up is about Fed manipulation. Folks, you're going to have to prove that to me, because I don't believe it. I know they have traders that do a lot of trading and stuff, but I don't believe they I imagine they manipulate it at times. But these markets are too big, and they hit these numbers, spot on. And I'll bet you there's not 3 people in the Federal Reserve System that ever even know what a Fibonacci number is. Okay, we'll take a little break here, and we'll be back to wrap things up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and I posted into Tiger TV a set of charts, two charts together, of course, that are making rounds on the internet. It's basically showing the cycles and the price action from 1929, and also bringing it up to where we were in 1987. If you did the work for 2014, you're seeing the same type of scenario possibly unfolding, especially with the action that we've had today. On both of those charts, the previous low before the rally and then the crash were perfect Fibonacci relationships. These charts don't show that because the people that are doing those charts are not familiar with the Fibonacci summation series, and that's why they miss it. But they are the same patterns, and the 2014 is very eerily the same, and that's why this low that we're potentially looking at today here on October the 13th is so very important, because if we only get a 5 to 10 day rally here that only goes, say, up to the 61 or 78% retracement of this last down move, then we're looking at a very, very similar situation to what we had in 1987 and again in 1929. So it's just going to be very interesting here these next several weeks. But the key is today's low must hold. If it only holds for like a day or two, that is incredibly bearish, because that means that cycle has already been broken, and that is going down for several more weeks, more than what we think it will, and that'll take down the market down more than 20% from the high, and probably a great deal lower than that. That's what it looks like. But right now, it's set up that it has a chance here to keep going. And we'll keep our fingers crossed, and maybe the trading gods will be with us, and we'll get a really good place to put a short sale on in the S&P here in the next week or so. But right now it looks like we've hit major support, and it looks pretty good. The number on the downside, someone asked me on the gold to look to buy it, would be around $12 per ounce. That's what we would be watching. That would be a 61% retracement of this last move up, and that should be good support at $1,200. But here again, if we break below those lows that we just made in gold at 1182, you're looking at 990 or lower in gold, $990 per ounce or lower in gold. So that's why it's so very, very critical to keep that 1182 level intact, because if we break below that, boy, that's not a good thing, because that tells us that we're heading down, and we've been heading down. This will start the acceleration. We have gas here in Tucson is actually selling for $2.96 a gallon now, so it's very, very cheap. So if you need to fill up, come on to Tucson. We'll be happy to take your money, get you a tank of gas, and you can drive home. But these prices of petroleum products are really breaking hard. Heating oil in the middle of a seasonal area where it should be going straight up is going straight down. And these markets are in serious trouble from a technical point of view, without any trouble at all. The other question about the VIX is, if we get that VIX above 23, that means that this low that we're seeing today in the S&P, the NASDAQ, and the NYSE has not held, and then we're on our way to 45 or 50 eventually in the VIX index, because after that big base that's formed over the last year when everybody's buying stock, and everybody that's bought stock in the Russell is losing. So anyway, live every day in an attitude of gratitude, and may God bless, and do something nice today for someone who has a lot less than you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.